Hello and welcome to Dividend Learning Channel. Today we will be looking at a stock that was considered a penny stock for some time, but has increased by 503% in the last 6 months. Stock under review today is Clover Health Investments. Stay with us to see if this stock can continue to rise and potentially provide shareholders with life-changing returns. So what does Clover do? Clover operates as a next-generation Medicare Advantage insurer that leverages its flagship software platform to provide highly affordable and obvious healthcare plans. Clover strives to improve clinical decision-making and outcomes by empowering physicians with data-driven, personalized insights. Stock price is currently $3.90, but was trading at 65 cents in April 2024. All-time high price was $15 in 2021, few months after the company went public. Time to jump into our analysis and how Clover went from being a penny stock to now being considered one for the future. Before we move into the profit and loss, let me just remind you that your support is valuable to the channel. If you find this video useful, please subscribe to our channel and like the video as it really helps the channel grow. Revenue has increased from $462 million in 2019 to nearly $3.5 billion in 2022. This nice and steady growth could not be maintained during 2023, and inevitably the stock price went downhill. Despite the decrease in revenue in 2023, gross profit has been increasing in the last 4 quarters. In quarter 3 of 2023, gross profit was 13%, while in quarter 2 of 2024 has increased to 30%. This graph shows net profit compared to revenue, and as we can see, net loss has been also decreasing despite the drop in revenue. Clover seems to be moving towards the right direction, and in fact, the company had a positive net profit margin of 2% in quarter 2 of 2024. This is the first time the company has a positive net profit margin and is one of the reasons of share price spike. Cash and cash equivalents have been increasing during the last couple of quarters, while the company has also managed to reduce debt in the meantime. In this graph, cash and short-term investments are compared to total debt. We see that cash and short-term investments increased close to $400 million, while the long-term debt is very low. In fact, long-term debt has been decreasing since 2020. Company has raised $814 million and $290 million in capital in 2020 and 2021 respectively, but has been slowly buying back shares in 2023. This trend continues in 2024, which effectively adds value to shareholders as they hold a higher percentage in the company compared to before the buybacks. Moving on to cash flow, net cash from operating activities has been negative until 2023. In fact, company had an outflow of $116 million from operating activities. In quarter 1 and quarter 2 of 2024, company has managed to have a positive cash from operating activities. Amount generated was $45 million in quarter 2, which is up from $26 million generated in quarter 1 of 2024. Free cash flow follows the same trend as operating cash flow, which is a positive metric for Clover Health Investments. Overall, the company has shown remarkable improvement in its income statement, balance sheet, and cash flow statement in the first 2 quarters of 2024. While this is a positive outcome which has been reflected in the stock price, we have to look at the future prospects of the company for the foreseeable future and see if it is a good investment going forward. Before we move on to expectations, let's go through some news for Clover Health. Company has some positive news recently. Centers for Medicare and Medicaid Services has increased the star rating of Clover's PPO Medicare Advantage plans to 4 stars for 2025. Due to this increase in rating, company expects to experience a 5% quality bonus in benchmark rates for 2026. HMO plan has also been boosted to 3.5 stars. Notably, Clover has earned a 4.94 out of 5 stars in HEDIS, reflecting high-quality care in areas like diabetes and heart disease management. UBS initiated coverage of Clover Health with a neutral rating, stating it believes the company has done a good job at improving operations and medical costs. By a letter dated September 26, 2024, staff of the Securities and Exchange Commission's Division of Enforcement notified Clover Health Investments that the SEC had concluded its investigation and does not intend to recommend an enforcement action. It is not all rosy for Clover, as there are some negative projections going forward. Consensus of analysts estimate that most U.S. health insurers are set for sequential bottom-line decline in Q3 of 2024. Earnings per share estimate for Q3 is -4 cents versus actual earnings per share of 0 in Q2. One-year forecast is -2.76% compared to +1.91% of the industry. As mentioned earlier, the consensus is that the company will have negative earnings per share for Q3 of 2024, and this trend will extend up until Q1 of 2025. It is expected that the company will return to positive EPS in Q2 of 2025. So is the company a buy? Institutional investors hold around 18% of the company, but this represents a decrease of 34% in the last 12 months. Zacks had ranked Clover as a buy in early September, but since then, rating changed to 3, which means that the stock is no longer considered a buy, but a hold. Refinitiv and TipRanks also give a hold rating to the stock with an average target price of $4. Without question, the company has made a remarkable turnaround of its fortunes in the last 12 months, improving almost all metrics we have analyzed. The 500% increase of the stock price in just 6 months is a very good return to those investors that were early believers. Based on what we have seen, I would be a bit cautious about buying the stock at current price levels, especially if your investment horizon is 12 months. If your time horizon is 10 years, then I would probably add the share in the portfolio and dollar cost average along the way. This is not a financial advice, and you should always do your own research before buying a stock.